Alrighty. So we're gonna talk about two swing strategies. We're also gonna talk about trading system, how to put everything together. How to put everything together, guys. All right, just all right. So today, very important lesson. Earnings season right now, so it's a good lesson to learn. And there's a lot of setups coming in for this earnings seasons, and just prepare for the next earnings seasons if you miss on something. There is a common theme, right? Buy the rumors, sell the news. So very often stocks somewhere in the middle, after the earnings release, in the middle of the not in the middle, after the earnings release, like a 1 month or 1.5 months after, they try to make some sort of a consolidation and build up from there. And that's when you gotta look for some sort of a signals for the price to run for the earnings. And I'll show you a bunch of examples, and that's what we had. Sometimes you gotta look at the price and see what particular stocks do before the earnings, after earnings, and during the earnings, and play the probability, the odds. If the company reports 8 out of 10 time earnings really good, and stock actually runs after that about 10, 20, 30, 40%, well, the odds is on your side, so you possibly can play this for the earnings. And if the stock is also tend to run before the earnings, it's probably worth buying it before the earnings and taking some profit into earnings and hold some, because the odds telling you that possibly the earnings will be good again, and possibly you're gonna get another 20% move or something like that. So it's kind of like dropping some ideas here, right? And what we have to look at it. So I want to break it down first of all. In a trading system, when you have a trading system, guys, what you gotta look for, you always have to have less emotional trading, right? How can you trade without emotions? There's impossible to do it. What you can do, you can learn how to control your emotions, right? But how can you actually work on your emotions if you don't have a strategy, you don't have any trading system, nothing like that? So that's why you have to create a trading system, right? Just write it down, your business plan, write it down, your playbooks, write it down, your characteristics for trade management for those particular playbooks, and nail down, work on that part. This is part A. You gotta know how to trade and what to trade, and how to manage trades, right? This is number one, working on technical game. Number two is a second part. It's a mental game aspect. Is when you got to work on your fear, greed, emotions, and they're gonna come. We all humans, and we all make mistakes, and we all get deviated from our playbooks, from our scanning tools, and execution gets poor. And that's why this mental game is the second part. I'm not breaking down here in details, not any of the specific parts, but mainly just giving you the whole picture of the trading system, how it should look. And mainly focus is going to be on that watch list. You got to find the stocks to trade, and certain tips and execution, right? So the business plan is very important. So you got to have some sort of a rules you have to follow. The money management and risk management aspect, the psychology, the preparation. You can take screenshots and kind of look at it where I'm looking at, right? For example, this is very important as well. So once you go full time and you start making money this as a living type of thing, right? Because it's business, right? You have to understand the expenses. What's your break-even spots? What's your how much money you gotta make every day to be break-even? But it's a long process before to get here. You actually have to make money. So don't quit your job after a few months when you start making money. No, you gotta make money at least for a year. At least for a year. So to build that confidence and build a cushion and have money, right? So you can look at the business plan, and if you have any questions, let me know. Accountability, this is another section. Trade management. So so for the playbooks, what is a playbook? Playbook is your strategies. Usually, I try so many different strategies, like 20. Got statistics for many of them, from scalping to scalping on like 5-minute charts, 1 minute, 2-minute charts, intraday swings, overnight swing strategies, you name it. All those ABCDs, wedges, flags, everything I tried, and came to conclusion that the best and the cleanest and the most applicable to my style, to my lifestyle, and just in general, you don't want to, like me personally, I don't want to be like trading is number one. That's what I want to do all the time. No, I want to put on trades and just go enjoy the life, spend time with family, loved ones, and so on and so forth. So that's why trading is actually like somewhere the third, fourth spot. It's one of the incomes, right? You should have. So that's why we have to have playbooks, guys. You have to know what strategies you trade. So I trade few strategies right now, only two actually, mainly on the long side. Mainly on the long side. I can join on a short because it's just a flip, similar situation. But two setups, it's breakout, or bounce, pullback, right? So first of all, let me get into playbooks. I'll show you some breakout ideas. Actually, I created this fresh just for the lesson. So this is a breakout idea. Breakout is when price breaks above a price range, minimum 1 day breaks. Ideally, I'm looking for a range breakout, 2+ days of consolidation. 1 day and range breakouts requirements. So you gotta have some sort of a catalyst news. If you don't have it, that's fine. You can play the idea like run before the earnings and stuff like that, right? Short squeeze could be an idea. Room to run, ideally all-time high for the breakouts, right? Possible short squeezes, big key level. Price have to be next to the big key level for potential breakout, right? At the resistance, we have to touch the resistance for us to break. Ideally, right before the breakout, you want to see some sort of consolidation, build up range. So it will give you an opportunity to put your stop not so extended somewhere at the prior pivot point, but when it builds up before the breakout, so you can adjust your stop to this level. So trend line breaks is another thing. Oversold can be really helpful. Moving averages pointing higher, moving averages crosses, moving averages coiling when they all coming together. Often they can run for multiple days and even weeks. The key is to be at the beginning of the move, right? And let the move write itself. Good example is below. So first of all, the trade management. There are free entries. There's no other way you really need to enter any trades, particularly breakouts. You guys enter at the open if price not extended. What do I mean by extension? So you got to use logic and common sense. This is like a big thing. What if stock opens 10% up? How common for the price for the stock to open 10% up and then continue move higher, unless you do research and find that stock has news and unexpected news. and something crazy and there's a higher short interest, yes, maybe. It doesn't happen that often, and probability of that to play is a 50-50, right? So when price gaps up higher and 10%, you really gotta wait at the open and don't chase the price and let the price to pull back or build up, give you the signal. What I usually have, I have an entry for the pullback. When we extending, opening higher, wait for the price to pull back, build up, maybe come close to a key level. You have to be buying breakouts close to a key level. The key level is there for a reason. That's your support resistance. That's where you're eventually going to put your stop.
I'm having trouble.
Siri listening to me. All right, so what if the price is not extended, right? We're opening in exactly breakout 80 and trying to break, and I'll show you some live examples from today. But that's when you enter. The once we entering this new 88, breaking the high and volume confirms, even better, you enter the breakout. What if you missed? It happens, right? You missed, you worked with something, you put a homework together, and you just came in power hour and you're looking at some stocks and you're like, oh, this stock looks really good, but should I buy? Well, you gotta look at how it closes. What if stock shoots up in the morning and the rest of the day, more than half of the day, it consolidates on a high? Closing on a high, with a nice consolidation on a high, creates that support, right? The consolidation creates the level, intraday level. It doesn't mean we can't break that level to the downside, especially on some market news, somebody talks, or some China-related news, or whatever it could be. But it gives you a potential idea for you to buy end of the day because stock closed on a high. Another reason why, because buyers keep buying on a high and don't let the price go down. It doesn't work 100%, nothing works 100%, but I use this as an additional indicator. Most likely buyers are willing to buy on a high and they keep buying on a high, and we have more room to go. So stop yesterday's low. You gotta use daily candles to be protective, or important pivot point when there's more levels underneath. If you have moving averages underneath, you have the trend line underneath, you got a lower high pivot point, and you got some value area, and you got Fibonacci level. Oh boy, 5, that's 100%. That's where you should put your stop. Most likely it's going to be the safest spot ever. Targets is a big one. Use Fibonacci levels as your targets. Use prior pivot points as your target. Use VPA signals. So you see sign of move. Sign of move being over. All right, so that's probably the best, and comes with experience and understanding the charts. So you gotta understand volume price analysis and see when the move is about to be over. So pay attention to the daily. Don't get distracted by a small time frame, because that's when you get a lot of noise. You can get an entry on a 5-minute chart, and that's how I do it. Entry on a 5-minute chart, and then that's it. Put my stop, my target, and that's it. I don't micromanage after that, I don't look on a 5-minute chart, because you will get a lot of signals and a lot of distraction. So gotta stick to your plan. I'm gonna show you a few examples here. So NVIDIA, recent example, right? So NVIDIA had a very massive consolidation, tried to break higher. So we have few levels here. We broke this pullback, kind of bouncing and then coming back. Nice consolidation right before the breakout right here. And then clean breakout. So that's where you can put your stop under this level and play for the breakout. When move is over, well, you got to use Fibonacci level and kind of look at this leg and kind of compare this leg. So the 100% move for this leg probably will be around this area. That's where you should take a target for sure as a Fibonacci level. And then you should write the moving average 20 MA. Definitely VPA signal gives you right here indication of potential double top right here, 2 red candles on a row, or similar like here. But also think logically, 1 leg up, 2 leg up, 3rd leg. How many more legs we can do, right? I know we all want to have our stocks go into the moon, and you know, maybe we can get 1000%, right? Just gonna be realistic. Stop playing games of this unrealistic diamond hands bullshit. Ain't working here. One time you get lucky, but you gotta play statistics and mathematics here, and that's it. So here's another example. Napa, also recent. You got this cap build up, consolidation. Use this as a measure move. You see the prior move, we had a breakout over this range, very nice breakout as well. So you see the move, how big is the move? So, all right, so we're trying to break this. How big is the move? So prior pivot point is your target. And then probably you want to see if it can run higher. What else? Remember I mentioned before the earnings, stock tend to run. Here's the mid of the month. Nice consolidation, and then right before the earnings, we started to make this move. Earnings came already, I believe, like yesterday. So, and the stock kind of like, you know, sitting in this chop right now. Yeah, that's how it is. Show you another one. This one is really good. Breakout of the lows on Spout. The difference was it was in downtrend, right? It was in downtrend, but moving average cross, you got a after earnings, so this was in a rear mirror, right? So we have an opportunity to actually run after earnings. So you got a gap down, pull back, and then consolidation right at the key prior breakdown level right here. And moving averages, very often they're squeezing the price. It's an additional indication. Once we clear this, so we tend to run. So this is the first entry. Where would you put your stop? Well, you got a moving average underneath, you got a consolidation. Those are 2 areas where it's fine to put your stop, because you have 2 supports, right? If you want to be more conservative, you got a wide range bar right here on a volume. You can put it, so it's 3 levels. If you want to be even more conservative, low of this earnings day. So we got 4 levels of support right here. Price have to clear before it is going to do some sort of a movement, right? Lower. And as you can see, it's still working, and I'm actually on this trade right now for the swing higher. I have more examples, but let me move to bounces, strategies that offers bargain prices, right? Bargain prices. The key is to look at for bargain in a strong stock, not something that like Chinese stocks right now, right? Been just selling. I mean, you can get a dead cat bounce play for 1-2 day bounce for like 5, 10, 20% maybe even, but that's it. For the swing trade, most likely it's just not going to work. You have to find stocks that have relative strength over 200-day moving average and possibly can keep trending, right? Keep trending. The point for you here is not to get just 5, 10, 20%. Get 50%, get 60, get 100% moves. And you got to be on the best tickers for that reason, right? So oversold. Sometimes price have a gap down, which can be even better for a deep buy or a very extended name, right? So overextended to the downside, RSI is around 30-50, support moving averages price kind of at support, right? Creates intraday setup. You got to look for some sort of an intraday setup. For example, this one created on a daily 1, 2, 3, 4, 80, and that being a very nice level for daily, for like quadruple bounce, right? For intraday, what do I mean? Like when the price is opening and let's say it's doing a flag, possibly people are going to be entering on the flag as well for those scalpers, day traders. So it's going to give you additional ice, additional juice, additional volume. So when it has intraday set up, right? So again, entry right at the open if it's not extended, entry on a pullback if it's extended. The same approach here, and the target until you see until no reason to hold, right? You see the reason to sell. Also, I do have value area here. This is on a daily chart. The red one is point of control. That's where the most amount of volume at specific price was done. That's where we might see some sort of a resistance. And then we have value high, value low. That's considered to be the true value of the stock. That's what buyers and sellers think. That's the value the price should be for the stock. Sometimes the range can be really tight, sometimes it's big. Keep in mind, this is for the whole period here, the daily charts for like 1 year, right? It's actually more than 1 year. So yeah, and it's a good example how you could wait for this and anticipate this bounce. Anticipate this bounce, but do not enter on anticipation. Wait for the signal. Wait for the signal and enter on a good idea like this, right? Here's a recent example. I played this 200-day moving average. This is a day when they pay dividends and stuff like that. Gap down, oversold name, right? RSI at that time was around at 25. So, and you got double bottom. So, as you can see, for the day trade, you could take this as a double bottom. I'm pretty sure people took it. You got a VPA signal on a 5-minute chart right there. And very nice closing. So, I didn't take it on this day. I took on the other day. We had 3 5-minute candles pointing down with wicks and a nice volume. And after that, we got a breakout. I took a long, sold on this day on a high, and deal done. Why did I sell here? Because it came back to that moving average. And we still kind of looking weak, and most likely right before the earnings it might do some sort of a movement there, right? Just want to see what is cat doing right now. Yeah, it's cat just sitting there, not going anywhere. I was completely right taking the target. Could squeeze a little more, but right before the earnings, add a few targets here. So the prior level right here, point of control, definitely gonna and 20 MA gonna give us some sort of a resistance. This is a recent example with Fibonacci. I put it for you. So Bumble, right? We're making a move. So you write your Fibonacci extensions. So as you can see, it gives you potential targets. So this is 100%. So this move, and if the price is going to make a move here, it's going to be equal to this 100, right? They're going to be equal. So now we already know this is a lower high, right? We already know this is a lower high. Now this Fibonacci extensions we can use as potential targets and potential bounce areas. Now we're building higher low right here. And this is an indication for long. I took long right now, today, on this ticker, right before the earnings. What else is really good here? We above 2 moving averages, 50 and 20. What else? We building higher low. What else? We just entered the value. Usually when stock enter the value, they can run all the way to the top of the value. We have no problem. What else we also can draw here? I see right now. From this high to this, you can draw a trend line, and we want to kind of squeeze that trend line, right? You also draw a trend line right here, and as you can see, if we draw a trend line here, so as you can see, we're squeezing a little bit. So the breakout right before the earnings makes sense to play this. So those are 2 strategies I am playing it. So how do I find stocks? Besides using like scanners, I also have my checklist, right? I look for stocks that have room to run. I look for stocks that are closing high of the day for the breakouts. Price closing near the key level. Price doing closest retest when it shakes down both directions, right? And closing back. And what kind of reaction we have on the shakedown, right? The same day and the next day. It can give you the story. And I'll give you a few good examples of a shakedown. Yesterday we had price leveling, squeezing when we have a limit player and we're hitting the resistance to the penny, or when we're building a triangle, right, and squeezing the price. So the bids stepping up higher and trying to elevate the price, elevate the price, elevate the price, and eventually squeezing those offers out of the game and price shoots out. So find the key levels. Let me bring my TOS here and TOS here, and we're gonna talk about that. And we're gonna talk about that, guys. All right, so here we go. Let's start with some recent names. SPLK, for example. I'm in this swing right now. So right before the earnings, the idea is here. It's a bullish kind of looking stock in a downtrend, but we started to play for this bounce, also building head and shoulders, right? The shoulder, the head, the shoulder. Earnings came out. After earnings, we had this run, doing a bounce, building high pivot points. So we're using Fibonacci as this extension to predict our potential areas where we're heading, right? So we inside the value, bouncing of the point of control. It's a pretty good sign. So what do we see here? We see kind of move and consolidation. So yesterday, we had a shakedown. This was a pure shakedown below the prior day, 2 days, below the 2 prior day lows. So now price trying to break higher. So this is indication for the price to continue to go higher. This is a pure shakedown, you know, to collect stops right here for continuation higher. It is a little bit overbought. And I expect possibly we actually might do another leg down. Maybe gonna do another shakedown. So my stop, where would you put your stop here? Logically, you have 2 areas to put your stop. This is the best area around 131, right below this pivot point. Another good area technically around this 135, below moving average 20 MA, below the wide range bar when the movement started, and below the point of control, right? 135 plus, it's a whole number. Another little tip, I used to do that a lot. Let's say I enter on this day, right? I enter on this day and my stop is low. We're making a move and start doing it, this type of a deal, kind of building, let's say breaking on this day, right? What I used to do, I move my stop immediately. I micromanage. I move my stop right there because we started to make a move higher. But that's wrong. Very often you can get stopped out, chopped up. Do not move your stop until you see a clear pivot point build. So right now, seems like we're building a pivot point here. If the price resolves higher tomorrow, you can move your stop to this wide range bar, the shakedown bar, right? You put your stop below that bar and 20 MA. And then take your target at this prior pivot point. So your targets. This would be ideal. The 100% move, the same move like we got it here towards this 166. So you got a moving average on the way coming, right? 200 days. So probably somewhere around this area would be logical to take some profits. Why? Also, this is a good area. You see these shadow areas, that's where a lot of volume was done. So what else? This was kind of pivot point from here, and we came and tested this. So this area right here is going to be a target. It's going to be a target around 61.8% Fibonacci. So somewhere here, it's worth taking a target, and then probably it's going to be right before the earnings. And then, remember what I said, look at the stock, how it reacts to earnings. So we got earnings here. Let's even start here. So right here before the earnings, we had a run a little bit, right? After that, after earnings were reported, we ran and then sold. All right, right here, right before the earnings, we ran and then gap down. Look at this gap down, 199 to 162. That's a massive gap down. So take this into consideration. So this is the behavior of the stock. So you don't want to be trapped on something like this when stocks tend to gap down such a big percentage, right? So here we actually sold before the earnings, right? Here we actually sold before the earnings and did a little bit of pop. Overall picture, we oversold from 224 all the way to look at this, 50% oversold. So after this, we actually run higher. So I wouldn't be surprised seeing some sort of a run and then probably sell back to this area until all moving averages come close, coil, and build support, and then the stock might get to another leg higher. See what I'm saying? And that's how you gotta analyze this. All right, so back to our the watch list, the checklist I was talking about. Finding key levels. There is a trend change level. So this is the trend change. This is the bar when we started the trend change. This is the bar when the trend changed, right? So this bar, wide range bar, that's when we started to make a leg down. This is the bar when we stopped. So this considered to be levels. So this gonna be your level. Let me do this. This bar is gonna be your level. Then this bar right there is gonna be your level for the future. Same as here, right? This bar, it's a trend change. That's when the new leg started from this bar. Wide range bars, already mentioned that they consider to be levels. Why? Why wide range bars considered to be levels? Very often they have a lot of volume. This bar, wide range bar, it's considered to be level. Look at the low of this bar. What happened here? We exactly tested this level. What happened here on the top of this bar? Not much, right? Kind of broke here. You don't see a clean level at the top. Wide range bars have a lot of volume and a lot of attention, and they trap a lot of people on both sides. So in this context, sometimes wide range bars, when it moves like this, it depends on the movement, but it also can have a lot of buyers, right, on this wide range bar. And in the future, as you can see, we didn't move higher, but then came back to this area and rejected top of this wide range bar, right? Almost to the penny. Look at this. See, this wide range bar played out a key role, and it's a recent wide range bar. Gaps, a really good signal for targets, right? And levels. So we have a gap here, so we kind of didn't play this very clean, and nothing is clean, nothing is perfect here. So but technically this should be a nice support. We didn't hold it, went down, and this is the bottom of the gap. We kind of didn't even touch. Sometimes stock actually plays very clean and calm down, like UPS. It's a great example from yesterday. Look at that. You got a bottom of the gap. What happened? We got a beautiful bounce. Now what you got to look at this UPS, since this is a really good company, it's an uptrend, overextended for sure. Arrow side this time probably was around 80, 90 over there. But if they're going to provide support, and moving average is going to come closer, so we might actually hold this area. If not, so we might find a bounce around 180, right? So because this is the window. Consolidations create levels. So you have a consolidation here, you got a level, bottom to top. Once we break the consolidation, we dump. Same here. Same here. Look at this consolidation from here to here to here to here to here, and then breakout, and we do in a run. Another consolidation right before the move. All right, so level confirmation. Multiple touches, self-explanatory, confirms a level. Mirror flip, when support becomes resistance and then flips the other way, resistance becomes support. Fake breakouts, it's a psychology behind. Think about it. Everybody is looking for the breakout. You got to break and people entering, but it's not doing anywhere, and then eventually doing a fake move, right? Like here, let's look at UPS. So we having a consolidation, kind of doing a fake breakout here. People bought on this day, right? People bought on this day above this area and still holding it. But what happens the next day, they did another kind of attempt to go higher and then shook out all people. And stops get triggered. And then another attempt. At some point we were here. At some point we had a new high. People were buying long there for the breakout. Well, because they don't know what to do. They don't know how to do. They don't understand how market mechanics work. Simple, there's not enough buying from institutions at these levels, right? At these levels. And they create these areas shooting price higher. So people would join and then they would take those people's shares and build their own position on the short side. It's simple supply and demand rule, right? Another fake breakout here failed. And then after that, finally, they end up building a position. The position is built for the short. We're good to go right before the earnings. Whoever wanted short, sell, they did. That's it. We have a selling, and then after that, we can play another game. See what I'm saying? Tails the same direction. Tails the same direction. I'm kind of want to give you an example here on this one. Yeah, we have a bunch of tails the same direction here. Look at this. Lots of tails pointing out. So we going high, rejecting, going high, rejecting. They're selling on a high. They're shorting on a high. See what I'm saying? So this means we kind of and building lower high here, resistance. Consolidation I already mentioned. So limit player is kind of self-explanatory. All right, so what's next? Scanning. Scanning. So I do use scans here. This is one you can copy and paste. Gainers and losers. So gainers and losers we can scan. I usually want to do this end of the day and go name by name and see what is setting up based on that checklist, based on that criteria I show you. Let's look, for example, right now, TLRY today. What I was doing here, LI, you know, dead cat bounce and China names. There's nothing interesting here. NYCB, New York Communication Bank. I usually don't like trading banks, but Saba, like, you see what my point. So, so for the executions, I covered that part. Do not micromanage. Do not move your stop too early. Do not zoom into a 15-minute charts and see, try to see some sort of patterns, and it will throw you away. Just stick to your plan. Stick to your plan, guys. When you scan, you build a watch list. So now we can go, actually, I'll show you watch list from today. And I'll cover every single idea real quick and show you how to enter for the executions, right? So, SPLK. SPLK, as you can see, that's where we right now. I took a long position today on very nice pullback right here. Stop on the SPLK for me, it's right there. So we got a window, point of control, below moving average, below wide range bar. That's it. This is my stop. PLTR. I took a long on PLTR. Again, explain everything already right before the earnings. Beautiful shakedown here. Right of the key level. Building high-low. Stop goes below 21. ABNB. I took a long position yesterday. Added today a little bit more. I do like this kind of squeezer on this one. It's a little tricky. It's not that easy to play ABNB. My stop is below this pivot point and value. Even with that being said, we can sell lower. So ideally, your stop should be 120, 120. All right, so SI, this one is not a great example. I'm long on SI, took today again. We had a nice runner after earnings. So, you know, when you have news in a back mirror, so it's so easy, much easier to participate in one of the swings. You don't have to be worried about some news coming on, right? like earnings. So you have a move, then you get a pullback, attempt to go high, then pullback, moving averages support, 200 support, point of control support. So a lot of good support. And what else? Consolidation. What else? Remember what I said about trend lines? Trend lines, you can draw them. We attempted to break a trend line, we cannot, but we still kind of holding this. Once we start breaking, we have so much open space to run higher. So much open space to run higher here, guys. Crocs is the one I took, I got out, and I'm attempting to get in again. Look at this, bottom forming, very nice stock. Looking actually really good right now. Double bottom on a daily. 1, 2, 3, 4, 5. 5 bottoms on intraday 5-minute chart. So intraday pattern, they play in the bottom here. What else we see here? What else, guys, we see here? Squeeze. Oops. This is a beautiful squeeze. Look at that. If I can draw it. This is a squeeze. A little bit more of like selling here and not a bottom consolidation, and squeeze higher will result in a nice move. Here's Crocs. You gotta look what it does usually, right? It kind of consolidates and then runs. And look at this measure moves. It doesn't run like crazy like Square or like PayPal. But you can catch your 20% move if your entry will be precise. My entry was 132 right here, 130, and still get stopped out right there. Now the entry really good around this 126, 128. Let's see what it's gonna do. Disney, it's just a stock on idea, very nice, strong looking chart. So DHI on a pullback, as you can see, needs to build up here. Moving averages curl, earnings in the back mirror, and possibly we ready to go higher. So let me show you this ticker. Unusual options activity, hot sector. This is house related residential real estate. So I put this yesterday on my Twitter for potential idea right before the earnings, double bottom, very nice shakedown yesterday. Look at this. We built this level right here. We built this level. What we having? Shakedown and closing very strong. How could you enter today? And this is the execution part. You have an idea, daily double bottom, oversold name, hot sectors, many names in this sector were running. Another idea, right before the earnings, right? At the bottom of the value. How could you take this as a long? You have a gap up pre-market. You have a yellow line is a prior day closing price. The green price is a current day opening price. The red line is a prior day high of the day, I guess. Yeah, the prior day high of the day. And this dashed line is the pre-market high low. So how could you take this based on a 5-minute chart? Remember the entries? Breakout at the open if we not extended. Are we extended at the open from the prior day closing price or prior day high? No, this is no extension at all. This is a little bit of gap up, but it's a very nice easily identifying stop here. Your stop still goes low of this, low of the shakedown bar. This is a pivot point. And your entry goes right at the open for the breakout of all these areas and the prior day high. Simple as that. Simple as that. For the day trade, when you scalp and something like this, you can mitigate your stop at the bottom of this 5-minute range bar, right? Bottom of the 5-minute range bar, and even probably let's look at the 1-minute chart. What it did, you got a 3-bar play on the 1-minute chart. That's what you used to play for scalps. I would take long right here, put my stop right there, then mitigate it right here, and then partial, and then add more scalping, right? Yeah, you see, you can find these great scalp ideas based on a daily setup, That's where the most power comes in, when you find the daily setup ideas and more eyes gonna be looking for the same kind of stock. MKR after earnings, I put this on watch. Look at this. Beautiful breakout. How could you take this? Consolidation on 5 minute right here. Breakout. Do not anticipate anything. Wait. Do not anticipate. Wait. Get a signal long, stop below the prior day. That's it. You set your target 26 and higher. Great earnings. We all good. SYK. I took this long. Earnings came out. All-time high. So very often all-time high, people asking, where's the target? Well, measure moved and there's no resistance. We can go to 300, 350, 400. Who knows? What's your time frame, right? Investment, maybe it's going to be $1,000 in 10 years. I don't know. So you got to really see what is going on here. You got a range breakout. I took a long right here. 268, close to a key level. Look at this. Earnings, we gap up higher, we're selling and building at the key level, the prior day, at the prior day high. Building, building, building. It's looking good. So I took long here, might stop below the prior day low. Why? Because if it starts going down, so it's kind of broken pattern. So most likely it wants to go and consolidate here longer. Few more stocks I show you that actually did a good job today. New trying to squeeze, new core, looking really good after earnings. GRVG looking pretty good with other weed, marijuana stocks reporting. So this might start running right before a little bit, right? Kind of moving averages all getting squeezed. Sitting right now at the value and 200-day moving average. So you got kind of intraday sell, but not so much. Shakedown this day again. And now closing back on a high. So I took Fartech today, FTCH, right before the earnings. As you can see, we had this nice consolidation. I almost took it on this day because we closed above this moving average and tend to break higher. Nice squeeze coming in. We had a shakedown yesterday, and now they closing right here. I took long right there on this bar. We got a pullback, even better entry right here, and then I think this one has more room to run. Got to clear this point of control, and this is our area around 60 bucks. Maybe it's gonna make a move. Micro pivot point around this area, 50. Oops. 55 bucks, and see what it's gonna do. Well, it depends if it runs to 60 bucks before the earnings. I'll take some profits and then leave some to play out for earnings. But always look how we do. We ran before this earnings. Look at this move, right? After that, we sold and then continue running. For this earnings, we made a run and then sold because the stock was already overbought. For this earnings, we sold, right? We balanced. For this earnings, we kind of starting to build up on the bullish side. Where did I put my stop? Below the prior day low. That's it. That's also lines up with these two pivot points. That's considered to be a level for me. All right, last few stocks I show you. Bamba or Dash. I took Dash long, nice consolidation run before the earnings. We had this run. Beautiful run. What do we see? What kind of reaction? We have a breakdown below and sharp move higher. Attempt to break higher, make a new high, pullback, bounce of the moving average and the value. What do you see here by this price action? That the sellers, let me tell you this, there's a big player sitting on this stock right now. And this big player is a buyer. It's a buyer. Why? Because it won't let the price to fall too low. They control the price. They won't let it to fall too low. What else you see here? Trend line, building high lows. So I'm long at this day. My stop is right there. I bought it right here on a breakout today. All right, so AMD worth watching, but here's another one. That was Dash. Here's Bumble. I already shared chart review. Also, I took long today on this squeeze higher, stop below this pivot point. And that's how you kind of build this, guys, and find these ideas. For the mental game part of the business, right? Mental game. There's a lot. We can do a separate subject class about that. I think it's easier to control your mental game when you do swing trading and you don't have level 2 moving. You don't have day-to-day scalping involved. Your performance still have to be high, the high level, but it doesn't require so much mental capital drain, right? So if you guys have any questions about the business plan, about the playbooks, the strategies, let me know, and we can discuss. And I'll probably gonna make a separate subject about the mental game. And yeah, I hope you enjoyed this class, and take care.